Welcome back, everybody. My name is Jonah Lupton, and today, great guest, Matt Ehrlichman, who is the founder and CEO of Porch and Porch.com. I don't know which one you guys go by.
Yeah, it's Porch.
Okay.
Officially, we became Porch Group when we went public here at the end of 2020.
Okay. Yeah, when I go on Twitter, you guys have two accounts. You have the Porch Group one and the Porch.com, so I always get confused. Well, yeah, congratulations.
Porch Group has a number of different brands. Porch.com is a consumer-facing brand. We've got our ISN brand, our in the software brand for the inspection industry, Hire a Helper, software for the moving industry, and a number of others. But yeah, the parent company is Porch Group.
Okay, cool. Yeah, definitely want to talk about all that. So first off, congratulations on reporting some good numbers yesterday. I think the big takeaway for me and probably some other investors, and maybe one of the reasons the stock is up nicely today, is that you guys also raised guidance for 2021 to 175 million, which is about 140% year-over-year growth. Gross margins, high 70s, right?
Yeah, mid 70s typically. Yeah,
mid 70s. Okay. So why don't we just kind of start off with why don't you tell everyone what exactly Porch does?
Yeah, and it is. It's great to talk to you just day after earnings because we can really dig in. But we are excited to raise the guide. Clearly, we feel very good about how the business is performing, and to post first year out of the public markets, 140% year-over-year growth. It's fun to be able to talk about Q1 as well. Just give kind of a preview on that. But yeah, let's dig in. So Porch is a vertical software platform in the home services space. So we provide ERP and CRM software to a wide variety of companies. So home inspection companies, for example, where we're by far the largest provider of software in the inspection industry. We have about 28% of all home inspections that happen in the US are managed through our software. Provide software to moving companies, to roofing companies, work with major utilities. We run, in terms of how we monetize, a SaaS fee plus transaction monetization model. And so when we started this model, 5.5 years ago, it was, I would say, less common for software companies to have layered on transactions as another way to monetize. It was typically just SaaS fees. Increasingly, though, you see in other industries where software companies are layering on top transactions. And so, in particular, we layer on top these really high value services like insurance, where the companies, yes, they buy our software to help them run a better business and grow. They pay us B2B SaaS fees, but they also give us access and introductions to their consumer, which are typically home buyers, very early on in that home buying process. If you think about when a home inspection happens, it's right, after that offer is made and accepted, but before the consumer says, okay, great, this is going to be my home, because there's nothing found in the inspection. So they introduce us to these home buyers, and then we help those home buyers with these B2B2C services like insurance, helping them get movers, helping them get TV and internet set up, security, these really high value services for their home. So it's a similar flywheel to like an open table people might be familiar with, where they would provide software to restaurants, through that get access to the consumer, monetize with transactions and drive demand back, to those restaurants. Our flywheel is exactly the same. We're just fortunate that instead of, monetizing at $1 per transaction like open table, we generate $1,000 at times per transaction. And in the case of insurance, you sell an insurance and you get that recurring revenue, from that consumer. But at a high level, that's what we are.
Yeah, when I did my write-up on Porch a couple months ago, that was one of the parts that I really focused on, was the uniqueness of this flywheel, where you're providing software to the inspection companies, the moving companies, and then getting in front of these home buyers before anybody else does.
Yeah, and it's great. And one of the reasons the business has grown and scaled as fast as it is, is that our value proposition, when we go sell software to these companies, is just hard to compete with, because we can go to them and say, hey, here's our software. Hey, by the way, you can get it for free if you want to. Introduce us to your consumers, and we'll provide this moving concierge solution that you can give to your consumers to make that move easy. And the inspection companies get this 20-point lift in their own NPS scores. Because we work across many different verticals, we also drive demand back and put jobs on the calendar for these companies. So despite them not paying us out of pocket, these companies are worth so much more to us than if they were just paying with pure software fees. Then it allows us to have these really compelling unit economics. 30x LTV to CAC is what we see in the inspection industry, where we can be able to grow, and invest very aggressively, just continue to build share. So yeah, through that, we've been able to grow the business fast.
Not to mention a lot of these kind of blue collar companies, tradesman companies are typically not very tech savvy, and they've been very slow to adopt technology and, CRM and ERP. So you're probably helping them, accelerate their business in that way.
Yeah, there's no doubt. You see these companies grow dramatically once they come on to our platform. Right now, as I mentioned, we have 28% of all the home inspections in the US, but 50% of the home inspection companies still aren't using any kind of a back office CRM tool to help their business, really run as a modern company.
They're probably using clipboards, right?
Whiteboards, maybe they have a little bit of Excel, pen and paper still. And so it's just inevitable, to help these companies, run a business where you can have, online, scheduling and payment processing, where you can be able to have all of your schedules for all of your different inspectors and be able to have that routing and dispatch be run efficiently, right? You can have all of your communications be automated so that consumers, if they haven't paid or signed your contract, a day or two before, automatically get a text message, but you can have all the contract and all the signatures stored electronically. All of that type of tools is what we provide to these companies to be able to, again, just make their life easier and help them be able to build a business that can actually grow.
Do you guys use something like, do you use a DocuSign, or have you guys built your own kind of internal document signing product?
We it's not DocuSign, but we've plugged into some of the tech, from a partner. We'll often do this, like we partner with Twilio for kind of the core, guts of the SMS, kind of sending. And then we put the interface on top of that makes that really easy and kind of embedded for these companies.
Same thing for payments. I assume you guys are probably using Stripe or PayPal.
Yeah, not one of those companies, but exactly the same type of thing, where the underlying guts for payment processing, we work with a partner. We are able to layer that in. We can create significant, margin in terms of kind of what our effective take rate is from payments that go through our system. That's right.
So part of the story now is M&A, right? You guys have some of your own brands that you've grown organically, and then you've also been doing some M&A. I think you've done 4 deals in the last 3 or 4 months. So what's the thought behind that strategy?
Yeah, so first, even rolling into the IPO here, which was end of December of 2020, business have been growing very fast without that. So we've been running at about a 50% 3-year CAGR. We did 3 weeks after our SPAC IPO announce 4 acquisitions. That was actually one of the reasons to go public with a SPAC instead of a traditional IPO, is we could get public sooner, so we can go and execute against some of the M&A opportunities. And at that time, we took our guidance up from 120 million in revenue up to 170 million in revenue. Again, just increased the guidance here yesterday to 175. But even without the M&A, just to kind of emphasize, the point, without that $50 million guidance increase from that M&A, the business is still growing at 70%, year over year, even if you were to back that out.
Okay, great.
The core model and the core engine is growing fast. But to your point, your question, yes, we are excited about how M&A acts as yet another lever, for us to be able to grow, because we've seen this in the past where we can take, a company like a home inspection software company, plug it into our platform, and where that company is very small and the companies aren't paying that much and it's very mediocre unit economics.
Right, there's no scale right now.
Yeah, the reality is it's just not that deep of pockets when you're just monetizing with an inspection company. They can't pay that much money. But if you go after the deep pockets, you layer on the transactional monetization, and now you're generating revenue through insurance and through TV internet. Well, those are huge TAMs, and huge opportunities. You just transform how valuable these software companies are, really then unlocking the unit economics, and now you can scale it. And so we've seen, ISN would be a really good example. We acquired that business now almost 4 years ago. It was a very small company when we acquired it, 3 million or so in revenue. But within 2.5 years, it had 5x the size of the business. Within 3.5 or 4, now it'll be almost 10x the size of the business. And before, it was growing just very, very slowly. And so it's a good example of why M&A makes sense for us, is that we can acquire companies and plug them into our platform, and they're just worth more. So yes, that'll be a continued part of our process.
What are the financials behind some of these deals? I assume most of these companies, if not all of them, are profitable when you're acquiring them?
Yeah, I would say typically the businesses are at least break even. when we announced those 4 acquisitions, the businesses were around a 2x, revenue multiple in terms of where we acquired them. Because again, these are typically very slow growth, businesses. And we can bring them into our platform, and they're just, again, that we can explode the growth, and so they're worth a lot more, to us. In the case of one of the acquisitions, that's set to close here in early Q2, Homeowners of America, or HOA, that's us going deeper into the insurance value chain, where we've been operating as an insurance agency, where we can help this just reoccurring stream of home buyers, get insurance for their home. HOA allows us to actually go be a managing general agent and carrier, where we can be able to, 2x our effective take rates, from these consumers, while making that purchasing process that much easier. We started to be able to highlight some of the metrics around kind of our InsurTech, business, but we expect $270 million of gross written premium, in 2021 here between HOA and Porch. And for people that know about the insurance space, it's a 59% gross loss ratio in 2020. And so you just blow away some of the other InsurTech, companies in terms of those, the key metrics. And you imagine if, those InsurTech companies had this reoccurring stream of CAC-free demand, because these home buyers they're required to purchase insurance.
Right.
Or if you imagine you have this stream of data about the home, about the property, because the inspection is collecting all of the information about the home. We know if the roof is old, or all the appliance make, model, serial numbers. So all that data, and that demand gives us these really durable advantages.
Are you guys a national company?
Yep. We operate in all 50 states. Yep.
Okay. So let's just say I'm a moving company in Boston. How would I find out about Porch? How are you guys selling your software or marketing your services to these different companies, moving, inspection, and so forth?
Yeah, it's I'd say classic, SMB software sales. So we have, SMB inside sales teams across each of these different industries. We have enterprise, sales teams going after the larger named accounts across each of the verticals. We do all of the marketing that you'd expect between content marketing, digital marketing, in a non-pandemic world, all the kind of local event, based marketing. So our CAC, when we acquire and sell software into these companies, isn't so different than a typical SMB CAC. It's just that these companies, through our monetization engine, are worth, dramatically more than if they were just paying with software. Is really what unlocks the unit economics.
Any other verticals that you guys are looking at getting into?
Yes. I don't know if I'll tell you too much about it, but I would say, we now operate in markets, in verticals in the home space, where there's typically a lot of value in the demand and in the data, that flows through. And so it'll be very natural for us to look at kind of adjacent markets.
Should I guess, or just is there an announcement coming?
You're welcome to. I can't confirm either way. I don't think you or your listeners want any material non-public information. But look, we will continue to be aggressive, both organically and M&A. I will say, I've been fortunate that I've been able to build, 2 really nice large businesses before Porch. And for me, this whole endeavor, with starting Porch, I'd sold the first company, I helped to take the second one public. This was about going and building a truly great, enduring company, and so the whole strategy of the company has been put together to have these really deep, competitive moats that are very durable, that are going to allow us to be able to grow for a very, very, very long period of time. We think we are set up to build a really big business, now. If you just think about insurance, and ignore everything we do for the consumer around moving and TV and internet, and all the other setup services for their home, and then ignore us extending the relationship to help them ongoing with their homes, but just take a look at insurance. Like, we could build a massive business, with insurance on top of our software platform. And so we're excited about how we're set up.
Now, are you guys, so one reason I first found you, I wanted to play in the real estate space, and I was looking for kind of a derivative play on the real estate boom, people moving out of the cities, buying second homes, that sort of thing. Has that been a nice tailwind for the business?
It was interesting looking at 2020. We saw both headwinds and tailwinds at different parts of our business in different times. Certainly from mid to late March to the end of June, massive headwinds. I mean, the business, nobody was moving, people weren't doing stuff in their home. By the end of June, that had fully recovered, was back on track. In the second half of the year, we saw good trends in terms of, home sales, but you also saw headwinds with some businesses, like a lot of the home inspection companies, the small ones, really put their business on pause just because, they're waiting to get vaccinated. A lot of these people are over 60-year-old males, who wanted to wait till the vaccines. We just yesterday, we were talking about Q1. We are starting to see some really good trends where, with vaccines, now these people are coming back, so we're able to get the B2B SaaS fees from them. But we still have really good kind of macro dynamics from the housing, sector, where obviously people are moving and we're all, we're in our homes. We're all spending more money, on our homes. So yes, it is a good space to be playing in from a macro perspective.
Gotcha. I know you don't have much more time. What did we skip over that you'd like to dig a little deeper on?
Yeah, let's think what the investors will typically ask us about. I mean, we
how about the SPAC, right? Because you guys, when was the SPAC deal first announced?
Yeah, it was announced middle of 2020, and then through Q3, went through and kind of ran the whole process. We formally closed and rang the IPO bell December 24th.
Okay.
And so we just got our first quarter in, a nice clean beat and raise. I think people ask us about why a SPAC. I would say it wasn't the plan. We were anticipating probably a traditional IPO, but the reality is the SPAC was able to get us public a full year earlier. Traditional IPO would have been late 2021. And so for us, while there's pros and cons, I'll maybe take a second on the cons, but the pro was, we can go and go after some of the M&A opportunities that we've talked about, because it's just, it just really accelerates our business and great catalyst as part of our strategy. The cons, though, you don't start with as much hype, at least historically. We were kind of on the front end of the whole SPAC phenomenon, and you don't have built-in analyst coverage to the same degree. And so there's just
when do the analysts start to pick up coverage? I've heard about a month after. Well, I don't know. Sometimes they do a month after you de-SPAC, and a lot of them wait until after your first, earnings report.
Yeah, that's exactly right. So we just yesterday, I guess, had our first earnings report, and so we've had a few folks start to initiate between IPO and that, but we'll have have others here as we go forward. And that's a big deal for a company like ours.
Right.
If you look at Porch and you compare us to the other vertical software companies that are out there, there's a massive gap in multiple in terms of how we're valued versus them. Or if you look at the software companies that monetize with software and transaction revenues, there's even a bigger gap, because they, like us, have more levers to pull.
Who are some of them? Who do you guys typically compare yourselves to?
There's a bunch of folks that are out there, but I mean, you could, Bill.com would be an example. There's a bunch of these types of folks.
Which trades at a ridiculous multiple.
Yeah, and so you even put that aside. But if you go through companies like that have been able to figure out SaaS fees and transactions, the reality is, just you see it with Porch, is that you can grow faster because we have all the same levers of a typical software company. We get to go sell software with really good unit economics. It's extremely low churn, much less than 1% monthly churn from those companies because it's super sticky. You have really strong annual net revenue retention. The last public reported metric we have is 134%, annual net revenue retention. And we're able to go upsell modules. So all the same levers of a really good SaaS company, but we also get to have more of the companies pay us with transactions each year. And when they do, we get a 6x increase in value from those companies. And when we get access to the consumer, we get to continue to be able to make more from the consumer by layering in more new services to them, by increasing conversion rate, and by making more per service, like you'll see with insurance as we complete that acquisition. And so we have levers that allow us to be able to grow fast, for a long period of time. So anyway, the analyst stuff will take care of itself, and through that, the education it takes care of itself as we do what we did yesterday and just continue to kind of, execute, show that the numbers out here are solid and we feel really good about it. That'll all resolve itself.
Now, how does the customer typically find you? I know one way is through their relationship with the moving company, the inspection company, because those companies are sharing the data with you. But I assume that's not your only source of lead gen, right?
No, I mean, consumers will come directly to us, especially after they've met us. But I would say the vast, vast, vast majority of consumers, come through our SaaS software platform. I mean, we are a software company that embeds ourselves in these businesses, and those businesses provide this really warm, trusted introduction to these consumers at just massive scale. Again, there's no way that we can have even remotely close to the type of access we have to home buyers as early as we have if we are just doing direct to consumer, marketing. And so we don't spend time going and competing in all the paid direct to consumer marketing or anything like where all the other insurance or insurtech companies are trying to compete. We get introduced to the consumer from these companies, weeks ahead of the consumer going to Google, to go start shopping, and we get access to the consumer CAC free, right? So then we can just lay out all our options on a silver platter and make that purchasing process really easy.
So is there a pool shortage up there? Because I was doing some house hunting last weekend with my real estate agent, and I told her I wanted to put in an in-ground pool, and she said, "Good luck doing it this summer." No, there's a backlog on pools everywhere. So I don't know if you guys have seen that too.
It's fascinating if you just look around the country. I mean, there is a lot of money being spent on people's homes. It's just, as we have spent less and less on, travel and entertainment, all those, and people are spending time in their homes. Like there's really good trends, and it varies depending on geography in terms of what the services are that people are spending money, on. But so less pools, I'd say, up here in Seattle. We're not known for pools, but yeah, across the country, you see a variety of really positive things.
Well, this has been great, Matt. I really appreciate your time today. I know you're probably got some other interviews to jump on since you guys just reported earnings. Any idea when we might see some more analysts pick up coverage? Have those conversations already started?
Yes, and I would say, in the not too distant future, certainly we'll have, Q1 earnings here in about 6 weeks from now, and so we'll be able to, provide, more updates then. But I think, folks will start getting to work, and that'll just help again provide some more color to what Porch Group is doing. Awesome.
Well, thank you so much. I'm a happy shareholder today, and I have no plans to sell anytime soon. So keep doing a good job, and we'll look forward to the next conversation.
Hey, thanks, John. It's good to be here.
Yeah. Thanks, Matt. Bye.
Bye.